Hey traders and investors, it's Serge Berger here. Today we have to look at Amazon.com, and I have to send out a little bit of a cautious signal here, at least just for the near term, uh, due to an exhaustive pattern here. Now, first of all, let me just kind of give you guys a little bit of perspective, like I like to do. Amazon.com, if you guys, those of you guys that have been listening to my stuff for more than just a couple of weeks or so, you will remember that we came into 2016. I was very concerned that Amazon.com was going to mean revert lower significantly, and it has more or less reached the upper end of my support area. And I'm assuming at this point it's not going to drop below those February lows, but nonetheless, I remain concerned about the trajectory of Amazon.com. The concern here for the near to potentially intermediate term, as much as I'm bullish on the stock, is that we're likely going to have to pause up here, may even put in some sort of a double bottom, a double top type of formation for a little time. Okay, and it mostly has to do with the broader market being exhausted as well. So you can see we had a real bearish reversal here take place in the last week of December, and maybe we'll have it again this week. Again, this week's not yet over. More importantly, on the daily chart, of course, Amazon had a realized post earnings rally. That was this gap up it had here um, late last week. And that has once again separated the stock a little bit from its near term moving average. That's not so concerning. What's more concerning is a little bit what I'm hearing out there from a lot of folks in the analyst community and just generally consensus is that a lot of people are looking at this as basically having served as the sort of the platform to now shoot this market to fresh all-time highs like immediately, right? What I will say is something I've been saying on other stocks here recently is that the problem with that thesis is that not only does this stock gap higher and it's quite exhausted here from a momentum perspective, a sustainable breakout doesn't mean we can't break out a little bit, but a sustainable breakout, considering how far we're overbought, is very, very unlikely. Okay. Now, so what do you do? So what kind of trade could you do in here? If you do want to trade this from a long side, and it's entirely possible, you may want to wait until we break out of this current range here. It's a very simple break of the range type of trade. You can do that. But again, keep in mind that as long as the oscillators are this overbought, that momentum to the upside is likely not going to carry the stock higher for very long before it has to pause again. On the downside, very simply, we have, of course, this up gap from I guess last Friday, the 29th of April, that if we break below, at the very latest, if we break below 653, this stock has potential to start filling that gap down to about, let's call it 615 or so. So just a little bit of a cautionary note on Amazon.com. Again, I'm not bearish on the company. It's hard to be bearish on something that's growing this quickly and in all sorts of spaces. But again, from a timing perspective, not necessarily something you have to chase to the upside here right now until this chart resets somewhat, the momentum comes down, and it's had some time to take a bit of a breather. So that's it on Amazon.com. Please give us some thumbs up on the video. That would give me a lot more credibility on YouTube. Other than that, I will see you in the next video.